How's it going, friends and family? Today we have a stock analysis request from a viewer like you. We're going to be talking about Shift4 payments. In this video, we're going to be analyzing, coming up with a price forecast in the future for this company, and towards the end of the video, I'll be going over my game plan. Now, if you take a look at your screen right now, for the past 1 year, they're down, 37% into the red, and their forward trading multiple is a 10. So you would think it's a dumpster fire of a company and their financials and fundamentals absolutely horrific. Well, if we take a look at their top line and their gross sales, you tell me, does that look beautiful or does that look delicious? Looks like a compounder to me. And if we assess their free cash flow situation, up until 2022, they were negative, but since then, it's only growing at a pretty aggressive rate. And what makes all of this even more interesting is that about 11 months ago, February 2025, they were $121 a share. They're half of that right now. So needless to say, it doesn't take a wizard like Gandalf to tell me that there's a disconnect with the share price from their financials and fundamentals. So what exactly is Shift4 and how do they make revenue? So it's a B2B fintech company that's targeting music venues, football and basketball stadiums, hotels, and restaurants, and they're selling, their main product is the SkyTab, what you see on your screen right now. Now this SkyTab kiosk or tablet, it's pretty neat because it can do reservations, online ordering, payment processing, and they even offer data analytics. So Shift4 makes money whenever a customer swipes their card to buy something, and they get about 0.7% of the transaction, and they also make money from the ongoing software subscription fees and support. For instance, let's go ahead and assume that you buy a $100 steak at a restaurant, of which $97 will go to the restaurant themselves. Shift4 will get about 70 to 75 cents of that $100, and then Visa or MasterCard, they'll get about 15 cents. And then the card issuer gets the biggest chunk of the pie because they carry all the risks. So basically, at the end of the day, Shift4, they're selling the card swiper that you see right there. That's the SkyTab. And unlike Block, their competitor, Shift4's marketing and strategy is a little different because they give their hardware away for free or at a low cost to lock merchants into long-term contracts, whereas XYZ, they sell the hardware with no commitments. So it really depends on who you think has the better business model. And now let's talk about the recent developments that's surrounding Shift4. So they just posted their earnings back in November, their Q3 2025 earnings, and it went really well. And as a matter of fact, their net revenue for the full year, they're expecting 47 to maybe 48% growth year over year. And they won major contracts with the Hyatt Vacation Club, a timeshares company, the Cincinnati Bengals food and beverage concession stands, but also Clemson University's concession stands, and Hertz car rentals. So if you pause right there and think about it, most of their merchants, it really depends on an economy that's thriving for customers and consumers to be spending their money at those types of activities. Just something to keep in mind. And the leadership team did hint at the fact that there's some volatility in the restaurant and hospitality sectors, which is something that we already know from the Pfizer's earnings, which is why their share price went down by like 60 or 70%. And this one's pretty exciting. The leadership team did announce that they're integrating stablecoin as a payment method for their merchants going forward. All right, so what's the cheese situation? The things that you need to take into consideration? Well, their peers like Global Payments, ticker symbol GPN, XYZ Square, and Pfizer's Clover, every single one of them, they're all beat up right now, and they're near their 52-week low, and they're considered unfavorable by big money, hedge funds, and even retail investors are pretty skittish and scared of them. I'm going to be giving you my take as to why I think that is later in the video. And their current PE ratio, 31.1, absolutely misleading, and it looks higher than it is because of the acquisition of Global Blue. They just bought out another fintech company, which allowed Shift4 to open the door to the luxury retail payment processing space. And after some digging around, it's the reason why their gross revenue growth looks so impressive. I think it was at 61% year over year. However, without Global Blue, their net revenue growth was only 19%. which I think is still pretty good. But for the markets to see and hear 19%, not good enough. So the expectations for Shift 4, I think it's a little unreasonable. They wanted to see at least like 25% organic revenue growth or even 30%. To see 19%, they're punishing them, and their forward trading multiple is a 10. I think that's unreasonable. Third thing that you want to take into account is that they announced a $1 billion stock buyback program. Funny enough, PayPal's doing the exact same thing right now. They're buying back their shares as well, because I think their trading multiple is also like a 10 or a single digit number. Now, with all of that out of the way, let's go over the inherent worth of Shift 4. The first one's going to be the GARP formula, which is something that I created, and this entire spreadsheet, if you want to play around with it, it's up on the Patreon. So based on their revenue growth and their profitability going forward, the cheese value per share, they should realistically be about $105 right now. Dude, they're nowhere near that number. By the time you watch this video, Shift 4 could be $65, $62 a share. So the price that I would pay with a huge margin of safety baked in is $79. So if all of that cushion baked in, at about $80 would be a good deal. So at 66, I guess, according to the GARP formula, it's a screaming bargain, discount, Black Friday type of deal. However, to bring us back down to earth, if we were to do the multiples valuation, basically, according to their peers and how the market prices them, what should Shift 4 be valued at? And that would be $24.73 based on a trading multiple of 11.5. $24. Well, that's because Pfizer's PE is a 10.7, Global Payments is 11.1, PayPal is 11.5, so if we were to reference the GARP formula and the multiples valuation, then Shift 4 should be somewhere between $65 a share, which is what they are right now. Kind of crazy. So the tiebreaker is going to be another intrinsic valuation calculator that I made, and it's going to be based on their earnings and guesstimating the PE ratio for them going forward. Dude, I know it's going to sound really crazy, but I am proposing that they're going to be able to pull off $1.44 in the Q4, which they should be reporting their earnings very soon. So I guess we'll find out in about a month or so. So adding that all up, it should be $2.13 for fiscal year 2025. Something that you want to be aware of is that in 2024, their earnings per share, which is also known as the bottom line per share, the profits per share, it was $3.03, which means, yes, you are hearing this correctly. Their bottom line year over year is dropping when you divide it by the shares outstanding. So I'm assuming come February, when they report their Q4 and their full year numbers, I think their trading multiple is going to be around a 30, which is about where they are right now. And if that is the case, then I think Shift 4 could be $63.90. And according to their historical PE ratio, which is about a 44, then they could be around 93.72. Remember though, 11 months ago, they used to be $120 a share. So based on my estimations, I'm thinking about this from a very conservative and bearish perspective. And if we continue to play this game and fast forward throughout the years, yes, I am proposing that their EPS is going to grow by 55% year over year. And that's because sometimes their earnings per share grows by 100%. And other times, like this year, it's going to drop. And then for their fiscal year 2027, I'm thinking Shift 4 will be 85 to 107. So the upside 2 years from now should be about $20 into the green in a very realistic bearish case, but optimistically, I think they could also hit 107. And then about 3 years from now, I think Shift 4 could be 92 to about $103 a share. So in about 3 years, I'm thinking that Shift 4, the total return will be 44%. It's not the greatest, but it's absolutely not bad as well, because if you break that down year over year for 3 years, then the CAGR is about 13%, which is respectable, I think. However, keep in mind, these are really bearish numbers. For a company whose top line's growing at like 20 or 25% year over year, I definitely think the PE ratio being a 20 is very disrespectful. So next year, let's say, I don't know, about a 25, then Shift 4 could realistically, in a minimum case, $82 a share, and if they jump up to what the S&P 500's average PE is of about a 31, then in about 13 months from now, $102 a share as well. However, I don't really like looking at stocks in an optimistic lens. I like to look at it from a grounded perspective. That way I can honestly see whether or not it's a good deal. And I think in the case of Shift 4, it's not bad. And by the way, if you want a second opinion on a stock that you're eyeballing, give it a go with the Google Forms link that's going to be in the pinned comment. It's only $10 because I'll tell you what, sometimes you spend like $30 or $40 on getting a haircut and then it grows right back in 2 weeks. So $10 for a stock analysis, not bad. So when it comes to Shift 4, where do they belong in the compounder chart? And by the way, if you're a friend of this channel, yes, I did rearrange a lot of the companies based on recent events and developments in their financials and fundamentals. And a quick shout out to the Dividend Compounders with Cheese channel. If you're interested in any one of them, I have a deep dive and analysis video about Lululemon, about Sezzle, about the trade desk. So you can pause this video and watch one of those if you want. However, when it comes to Shift 4, dude, this might be controversial, but I do think it's a really good company, but that obvious disconnect from the performance of their financials to that of their stock price in the stock market. Consequently, I'm going to place them right next to PayPal and the watch list, wait list. So if a company's in the C tier, what I'm proposing is that it's going to be an average company, meaning their CAGR, it's going to be around that of the S&P 500. So like maybe a 10, 12% year over year. But for PayPal, in the past 5 years, obviously not the case. This is not financial advice, but PayPal, they're also undervalued, just like Shift 4. I truly tried to find a blemish for Shift 4. It's hard because I think they look pretty amazing, except their debt load. Their debt, especially in comparison to their peers, it's alarmingly high. I'll cover that here in a little bit when we do a deeper dive into their numbers. But I think what concerns me is that Shift 4, dude, they have fierce competition with very low switching costs. And it's a very crowded space. There's Toast, there's Global Payments, there's XYZ, Blocks, Square. And obviously I'm an idiot, but I don't think they have an economic moat. Now, in terms of the payment processing hardware space, they do have the #1 market share for hospitality, luxury retail, and for the sports stadiums. Okay, but I do not think they have an economic moat. I think there is disruption around the corner. And I was looking at small business owners' complaints and reviews on Instagram and on YouTube. And it seems to be across the board, whenever you have an issue as a merchant, like if you're running a restaurant, there's no hesitation to jump to the competitor. So if someone is having trouble with Blocks Square, dude, they'll jump ship to Shift 4 and vice versa. If you don't like Shift 4, you'll go right to Pfizer's Clover. Now, obviously, my opinion would be drastically different if they were the only one doing what they do. But in 2026, all of their competitors also offer data analytics. And in the software, the kiosk, the hardware, you could also make online reservations and do whatever you need to do. So there's nothing special that Shift 4 is doing, except honing in on a very specific niche of the entertainment and leisure activities landscape. So if you're going to a resort, if you're going to a New York Yankees game, or if you're going to watch a college football game at North Carolina State or ASU, Rutgers, Clemson, and I don't know if they publicly disclose this or not, but with the pending World Cup in a matter of months, they could be the exclusive payment processor for all of those games. And I can guarantee that a drink and a hot dog at one of those games is going to be like $20, $30 easily. Again, another shout out to the stock analysis request. It's only $10. Dude, it's not keeping up with the rate of inflation. It should be much higher, but I'm not out here trying to rip people off, So when it comes to Shift 4, what makes me hesitate? Like, why did I not put them into the certified compounder category right next to Adobe, Salesforce, or United Health? Well, I did a lot of research, and this is my homework, okay? I could absolutely be wrong, and I'm open to feedback or a discussion in the comments section, but the pending adoption of stablecoins, it's going to eventually cut out the middleman like Shift 4. Now, stablecoin, I mentioned it earlier, but stablecoin is basically digital currency that lets people send money instantly. globally and cheaply without any banks or payment apps involved. But for that to become mainstream and every consumer to buy in, I think that's going to take some convincing and time. I don't think it's going to happen overnight, but I do think that's the future. And that's why about 2 weeks ago, Shift4 announced that they're going to do stablecoin payment processing. So I applaud them for staying ahead of the curve, but they're basically not going to be a part of that equation in the long run. For instance, let me give you an example, okay? So Amazon and Walmart, the two biggest retailers here in the US, they're eventually going to create a closed loop stablecoins system. And those stablecoins, it's only going to be redeemable in their stores or on their websites. And they'll probably even throw down, incentives or rewards so that more customers buy in. Because if you think about it, as a business, Amazon and Walmart, they give up about 2.5 to 3% of every single transaction to these toll booth payment processing companies like Visa, MasterCard, Shift4, Pfizer. So it's in their best interest to cut them out and to use stable coins instead. So let's say Amazon will give everybody a 1% discount if you use the Amazon stablecoin. For them, then their take home is 99% instead of 97%. And consequently, it's going to increase their profit margin. And I don't know about you, but it does kind of sound like a gift card, because an Amazon exclusive stablecoin, you can't use that at a gas station. You can't use that at a Costco. And that's why when it comes to stablecoins, I think they're overhyped, but the practicality of them, you know what I'm saying? I feel like most people would rather just whip out their wallet, pull out a card, or use tap to pay, Apple Pay, Samsung Pay, Google Pay, and go about their day. I think to mess around with stable coins, and it's another thing they need to do, because for the customer, even if you throw a carrot in front of their face, I don't think they're going to care. Because by using their credit card that usually has a 5% or even a 2.5% cashback reward system, they would rather just use that than getting a measly 1% or 2% discount on their purchase. You know what I'm saying? But nonetheless, that's my opinion. But obviously, big money, they don't care. Because of stablecoin and the trajectory of fintech just being disrupted and changing by the day and by the minute, that's why they remain bearish about PayPal, Pfizer, XYZ, and Shift4. To be honest with you, I think it's unreasonable and it's very emotional, because when you look at their financials for any one of those companies that I just listed, they're thriving and they're growing. But because of the narrative and the speculation that stablecoins and purchasing things with a 0.00001% of Bitcoin, they think that is going to ultimately replace these payment modalities that are in place right now. I mean, obviously, I think in the future, anything can happen. But for that total disruption and replacement, I don't think it's going to happen overnight. I think it's going to take time. It's going to take probably, what do you think? I think for the world to adopt the credit card swiping system, that took decades. For people to transition into using stable coins or cryptocurrency and removing all of their Visa and MasterCards, or throwing away all their card swipers or tap to pay kiosks, that's also going to take time. Obviously not as long. I guess to take a step back and to further the fear mongering, there's also the development of FedNow, which can process payments without Visa and MasterCard. So I guess when you look at the fintech landscape, I think I understand why big money is scared, but I also feel like it's being blown out of proportion. I mean, I could be wrong, but what do you think? So when it comes to Shift4, I think this one is a little difficult to assess and to make a conclusive and decisive action on my end. By the way, now it's the game plan. What do I plan on doing after learning about this business operation? Because by all regards, when you take a look at their key metrics, everything is growing at a very beautiful rate. Obviously, M&A is helping propel their growth, because their organic growth is not as stellar, but it's still 19%. The only thing that I want to call out is their debt to EBITDA is a 6.6. Now, for a fintech software, I guess they do sell hardware as well. To see a 6, I think that's alarmingly high, and it's going in the wrong trend. It was a 4.6 in 2023, 5 in 2024, now it's a 6.6 in 2025. I don't like it because the golden standard is 3, meaning from your core operating profits to EBITDA, it would take roughly 3 years of everything remaining the same to pay off all the loans on the books. To see 6.6, not a fan of it, but I think they make up for it because almost everything else is looking pretty delicious. You take a look at their volume growth. I mean, that's a beautiful situation, right? I think in 2020, going into 2021, they growth, nothing to write home about. But ever since 2022, and besides, I don't know about you, but I'm a huge sports fan, right? I mean, look at my background. Seattle Seahawks, Tottenham Hotspur, Seattle Sounders. I love sporting events. I really like how they're doubling down on the live entertainment side of the consumer spending landscape. I also like that they're number 2 in the restaurant space. Number 1 is Toast. And so having said all of that, I think my conclusion's going to surprise you. I think I like Shift 4. I like it. Now, obviously, my conviction level was not in the S tier or A tier or B tier. It's C. It's a lukewarm. Okay, you're turning on the hot faucet with the cold at the same time. Ow, my freaking elbow. So what I'm trying to say is please do not follow me into this one because honestly, it smells a lot like PayPal, meaning it could trade like PayPal and be flat or even go into the red for 2 to 4 to 5 years, right? I think PayPal is also a fundamentally and financially sound company, but if you take a look at the disconnect from their stock price and their financial performance, it's pretty scary because on paper, I think PayPal makes all the sense in the world. I think everything looks so freaking fantastic. But what I don't understand is how the heck does Wall Street and other investors continue to treat PayPal like they got a big old wart on their forehead? I mean, for their forward trading multiple to be a 10.3 with all of the different endeavors and features and stuff that they're rolling out, I feel like it's an injustice to PayPal. At a minimum, they should be at a 15 PE. At a minimum. 20 would be ideal, and I say all of that because when you think about their competitor in Toast, I mean, their current trading multiple is an 83, but their forward trading multiple is a 30.8. So what I'm trying to say is, I mean, obviously their numbers look pretty awesome and amazing. I mean, just like Shift 4, right? These exact same numbers that we're seeing. So what I'm saying is, why is the market so bearish about Shift 4? I mean, obviously it's because they're doubling down on the discretionary spending side of the house, right? Like there are some analysts and talking heads on the news that truly believe that we're in a recession right now. And if we are, what's the first thing that you're gonna cut out of your budget? It's coming from the entertainment side of the house, right? You don't have to necessarily go to that Clemson University football game. You don't necessarily have to go to that bougie-ass timeshare hotel resort. And so if those sectors see a decrease in consumer spending, then Shift 4 is going to see a decrease in the amount of money they make because they make money per transaction. I mean, obviously there's subscription fees as well, and I think that's like 7 or 8% of their total revenue, but 90 to 95% of the money that they make is through those transactions. So having said all of that, based on my understanding, I'm still bullish about Shift 4. Now, I did some technical analysis, and based on their indicators, I'm personally going to start a position at 57.50. If they never reach that price point, so be it. Okay, whatever. But if they do drop to about 58, 57.50, I'm jumping in. I'm jumping in hot. Again, do not follow me into this one because I truly think they could end up in the same fate as PayPal. But then again, I'm only one guy. What do you think about Shift 4? What am I missing? Do you feel bullish about them, or do you think the market's got it right with them? They truly deserve to have a forward trading multiple of a 10.9. I feel like that's ridiculously low, right? I don't know. And if you take a look at my hair, yes, I need a haircut very badly. Let me close the curtain again. I'm just in that awkward phase of, growing my hair out. It's too long to look good, but I also think it's too short in order to do a proper slick back. So it's in that weird phase. Got to do with what I have. And if you made it to the end of the video, I just wanted to let you know that I truly appreciate you. Thanks for taking the time to hang out with me and to look at Shift 4 together. Now, having said that, I love you guys. Stay safe. And I mean that. There's a lot of craziness happening in the US. When you walk home from work and it's dark, it doesn't hurt to look over your shoulder, left and right, Just have some situational awareness, please. Good luck in the stock market, and I'll talk to you guys really soon. All right?